In this tutorial today, I'll show you a simple provision for doubtful debts account. To show you how to answer, I'll take a question from 2023 IGCSE Accounting past papers. Let us have a look at the question. Stalla is a sole trader who sells goods on credit. She maintains a provision for doubtful debts at 4% of trade receivable. Okay, point to be noted, it is 4%. Okay. Stalla's trade receivables were at 31st December 2021 $75,000. At 31st December 2022 it is $77,000. Okay, so these are only information we have in the question. Now we need to prepare this provision for doubtful debts account. So here you see the three columns on the debit side, date, detail and dollar, and three columns on the credit side, date, detail and dollar, same. Okay, so this is the format if it is drawn on the exam paper. If it is not drawn, you can draw it. It is very simple. Okay, you have to draw it, but you need to know how to draw. Okay, if you put here one more, the folio column, it is okay on the debit side. Here on the credit side, folio column. Okay, actually this standard format has 8 columns, okay, including 2 folio columns. Okay, great. Now tell me, you see the question information, how is it? Will be tough to answer. There are 2 trade receivables. One is 31st December 2021 and the one is 31st December 2022. Okay, and we have the rate of provision for doubtful debts, it is 4%. Okay, now what to write here? What things will appear here in this account? So provision for doubtful debts account, you have only 3 things, 3 items to record. Number 1, the opening balance, that means balance BD. If you have, you have to write. If you don't have, don't write. Number 2, the current year provision for doubtful debts, okay, which will be appear as income statement here in this account. And then you have to write balance carried down, okay, closing balance. These are only things you have to write here in this account. But still you make mistake because you don't know how to answer this question. Okay, so here you see, prepare Stalla's provision for doubtful debts account for the year ended 31st December 2022. Balance the account at 31st December 2022 and bring down the balance at 1st January 2023. So here it is said we have to prepare this account for the year ended 31st December 2022. We have trade receivable on this date, 31st December 2022. We have trade receivable, it is $77,000. Okay, now what to do with this amount on this day? This day it is requirement. It is a requirement on this day. We have to bring down the balance, and we have a balance of trade receivable on the same date, 31st December 2022. It is $77,000. Okay, so let us write here $77,000 times 4%, right? This is the rate of provision for doubtful debts. So if we multiply, we get here $3,080. Okay, this is the closing balance of the provision for doubtful debts account, closing balance. Okay, so this balance will appear, closing balance appears as balance CD, you know, balance carried down. Okay, but question is where to write. Balance CD appears on the debit side, balance BD appears on the credit side. Provision for doubtful debts is an expense for the year. Okay, so this expense will appear as income statement. This will appear on the credit side. Okay, so here we have 3,080 we calculated on the closing balance, means balance of trade receivable on 31st December 2022. Okay, so we will write here on the debit side balance CD. CD stands for carried down. Okay, don't be confused. So here we calculated $3,080. Okay, when we calculated this amount, we calculated on 2022 December 31st. Okay, Now we have one more balance, trade receivable, okay, $75,000. We have it on 31st December 2021, right before 1 year. Okay, that means that balance was the opening balance, okay. So provision for doubtful debts on the opening balance, if we calculate at the rate of 4%, this will be the opening balance of the provision for doubtful debts, which will appear on the credit side, because provision for doubtful debts is a normal credit account. It has a normal credit balance as it is a liability. Provision, yeah, liability. So here we have $75,000, same 4%. So if we multiply, we get here $3,000, okay. This will appear on the credit side as a opening balance, okay. So let us write the date first, 2002 January 1st, okay. We will write here balance BD, okay. BD stands for balance brought down. So we calculated $3,000, okay. Now question is, why January 1st? 1st January 2022 opening balance, okay. That means the financial year started on 1st January 2022 and ended on 31st December 2022, okay. So these are the informations we had on the question and we calculated, we recorded here on this account. Now it is a requirement to bring down the balance, okay. How to bring down? This is simple. We have to see compare the two dollar columns. We see the debit dollar column is included. We will sum up the debit dollar column first, okay. So here we see $380, okay, 3,080. We'll take this amount to the opposite side here on the same level, $3,080, okay. Now if we subtract this amount from 3,080, we get here $80, okay. So we will write here again balance CD. No, never. We have already closing balance here. So this amount is the current year provision for doubtful debts. This will appear as an expense in the income statement, okay. So we will write here income statement, okay. And the date, what date will write? 1st January? No, we will write the closing date. That means 2022. We will write here December 31st, okay. So now requirement we have on the question, we have to bring down the balance. So here on the debit side we have balance CD, balance carried down. We will go to the credit side, okay. Here below the total we will write balance BD, okay, brought down. Which amount? Same amount, $3,080 will appear here. And now date is given on the question. For example, date is not given. Now what date you write? So closing date is 31st December 2022. The opening date for new financial year will be 1st January 2023, okay. So here we will write 2023 January 1st, okay. This is simple. I hope you understood.